Okay, and let's move on. Insurance companies are in focus with the government looking to change the investment regulations for these companies. Yash is here to give us more details on that and tell us what the changes could be. Yash, good afternoon.
Well, Vinny, good afternoon. Very interesting details coming out as far as the government proposals on Insurance Act amendment is concerned. Another one of those interesting amendments which the government has proposed is changes with respect to the investment regulations which currently exist for life in general and health insurance companies. Currently, as far as the investment limits, which means how much an insurer, whether life, general or health, can invest in a particular asset class is embedded in the Insurance Act. What the government intends to do is partially keep it in the Insurance Act and partially give the authority to decide the investment limits to the regulator. I'll tell you exactly what that means. What the government has proposed is to have 25% investment from life insurance companies in government securities, which means central government securities, another 25% in state and central government securities both. 25 plus 25, that would be 50% to be embedded in the Insurance Act. And with respect to the balance 50%, the regulator, that is IRDAI, to have the authority with respect to how much they want to allow life insurance companies to invest, let's say, in equity or infrastructure and social sector or corporate sector bonds. What exists currently is 25% embedded in with respect to the government securities, another 25% in state and central government securities, minimum of 15% in infrastructure and social sector, maximum of 20% in corporate debt and maximum of 15% in equity. What happens with general insurance companies, the government has said that 25% to be embedded in the Insurance Act with respect to investment in government securities, minimum 10% in central as well as state government securities, and the regulator to have the authority with the balance 65% how they want to allow general insurance companies to invest between equity, corporate debt as well as infrastructure and social sector.
Okay, Yash, thank you so much for that update there, and thank you so much for joining in with us. But let's move